Today in the grain market, soybeans were mixed. The futures just continued to move sideways, and now this is almost the third week in a row. We had a 37-cent range today, and it's really a major leveling off. All the grains really are at the mercy of the world headlines right now and kind of are stalled in their respective channels. But keep in mind, we still have some drought issues in the southern plains, but it's offset by, overseas sales are a little bit lower for soybeans. And, it makes it difficult for the market to move one way or the other. Now, the option open interest is kind of interesting right here. There's lots of activity in the July $20 calls, which is seems kind of interesting if that would even be a target. But the highest open interest is in November, the November $15 calls. So if that's saying anything, it's just something to watch. It's still a little bit out. All the numbers will tell the tale, especially when it comes to the end of the month, because we've got the acreage report coming up. Now, the CVOL for soybeans is 26%, the soybean oil is 37.8, and the meal's at 30.2. It just shows it's still very, very strong on the soybean complex as a whole. Corn also was lower. Those weaker prices are mostly consolidative, so that's consolidating as well. 19-cent range today, but not really much else. The channel is between 730 and 770 right now. And the option open interest is very active in that $8 call. It's up 1,800 contracts, but the highest is the December $8 at 24,881. So that's really something to keep track of, as we moved towards the summer. So I was kind of surprised when I saw that. I think that might be a leading indicator. The CVOL for corn is still pretty strong at 43%. Now today wheat was down. Export commitments are their second lowest on record. Now we did have a 50-cent range, and we closed 30 cents lower, kind of giving back much of yesterday's gains. And yet, all in all, it's still consolidative. Wheat sales are down 50% for the week, and for the last 4-week average, that just kind of tells the tale of perhaps why we're seeing a little bit of a weakening of prices. But the highest open interest is in the December $14 calls at 6,400. So perhaps there might be something to be said as we move down a little bit, down the line over the next couple of months. The CVOL for wheat is still high, even though it's been coming down at 72.2%. One thing to remember is the La Nina is said to continue to strengthen, and that may really start to impact some of the grain markets going down. And so we always know that, if you're feeding a bull, it takes 2 times a day, but if you're feeding a bear, it only takes once a month. Hence, I think this is why we're seeing that there's been a lid on the grain rally for now.